Hi, welcome all the viewers to Dr. Vijay's lectures on accounting, lecture number 11. We are with finalization of accounts. As a part of finalization of accounts, all the errors in the book should be rectified. The errors may be either those disclosed by trial balance or not disclosed by trial balance. Errors disclosed by trial balance requires the use of suspense account. This lecture deals with all the kinds of errors and how to rectify them. Where trial balance is not tallying, it shows presence of errors of arithmetic nature in journals and ledgers. Where trial balance is tallying, still there are chances for presence of errors. Such errors are known as errors not disclosed by trial balance. Nature of such errors may be either of omission, of commission, of principal, or of compensating nature. This slide too deals with omission and commission. Of omission, where a transaction is omitted in the journal book itself or day book itself, it won't reflect in the trial balance. A sale of goods on credit, if not recorded in sales day book, it won't reflect anywhere in the ledger book and trial balance will tally. Now next, error of commission. Errors in addition, subtraction, carry forward, etc. normally reflects in the trial balance. But the one says posting done in wrong account, debit posting to be given commission account, given wrongly in salaries account. It will not reflect in trial balance. Errors of principal. Where a transaction of capital nature is recorded as of revenue nature or the reverse, it is error of principal. Such errors are of very serious nature as it will overstate profit or understate it. It may be even deliberate or looked upon as deliberate. A purchase or sale of fixed asset, if recorded as purchase or sale of goods, it is an example of error of principle. At Sabu's firm, a sale of old furniture realizing $12,000 is credited in sales account. It is an error of principle. Now, errors of compensating nature. Where in two or more errors that can be disclosed by trial balance compensates each other, then it cannot be disclosed in trial balance. Example, interest received $700 is debited in interest paid account, while a commission paid $700 is credited in commission received account. Then trial balance will tally. Rectification of errors can be done by passing journal entries in the journal proper and posting them in the L11 ledger accounts. As a result, the account balances will change and a new trial balance will emerge. Rectification of an error may require entries for correction of the wrong entry and the correct entry. In some cases, both of it can be effected through single entry. For errors of omission, the first stage is not required as no entry is passed so far in respect of such error. Where the trial balance does not tally, accountant should open a suspense account in the ledger book and show the difference between the sums of debit and credit balances in it. Where the shortage is in debit total, the difference should be shown in the debit side of the suspense account and vice versa. On rectifying the errors affecting the tallying of trial balance, one posting, debit or credit, will occur in suspense account. Rectification of the other errors which are not disclosed by trial balance do not have any posting in suspense account. If all the errors affecting the tallying of trial balance are identified and corrected, suspense account will close automatically and the trial balance will tally. Slide 6 gives errors at Sabu's firm on 31st January 2020. We know at Sabu's firm there is a trial balance which is tallying on 31st January. Therefore, the errors given are errors not disclosed by trial balance. Let us go through the errors. The following errors are disclosed through close scrutiny of the vouchers, journals, and ledger accounts. Number 1. Interest credited in the passbook $400 not recorded in the cash book and ledger accounts. So 2. Charges levied by the bank for service rendered $3,200 not incorporated in the cash book and ledger accounts. These two errors we have identified at the stage of preparing reconciliation statement. Now let us go to error 3. A sale for cash of old and inherited furniture and fittings in non-usable condition and not included in assets in opening entry for $12,000 is treated as sale of goods and credited in sales account. A sale for cash of old and inherited furniture and fittings in non-usable condition and not included in accounts in opening entry. See, this furniture, even though it was there at the time of inheritance, it is not considered in the opening entry. Therefore, it is not made an addition to the capital account. And this old furniture is sold for $12,000 and is credited in sales account. Okay, let us go to next error. A sale of goods for $6,000 from Najib and Company is debited in cash book bank column, but collection is not so far materialized and found irrecoverable. We have seen it at the time of preparing reconciliation statement. An amount of $6,000 shown in sales account credited as recovered through bank, it is not actually collected. Now it is found that it is not recoverable. Next, clearance of some old debt prior to inheritance to Gurumurthy for $3,000 is debited in commission account. The old debt is not shown as liability in opening entry. See, at the time of inheritance, there was amount due to Gurumurthy, $3,000. It was paid during the month, but it is debited in commission account instead of debiting Gurumurthy's account. The old debt is not shown as liability in the opening entry. At the time of opening entry, this debt to Gurumurthy, it was not recorded. And so the resulting deduction has not happened in capital account. Errors 1 and 2 at Sabu's firm are of the nature of omission. Interest allowed by the bank not recorded in cash book and bank charges not recorded in cash book. Error number 3 is an example of error of principle. A sale of old furniture and fittings treated as sale of goods. Errors 4 and 5 are of the nature of commission. Let us consider error number 1. Interest credited in the passbook $400 not recorded in accounts. It can be corrected through single journal entry as it is an error of omission. The required entry is bank account debtor to interest received account $400. The effect of the entry is interest allowed and credited by the bank in passbook gets debited in the cash book bank column. Interest received account is credited as it is an income earned by the firm. Error number 2. Charges levied by bank for services rendered $3,200 is not incorporated in the accounts. It is not shown in the entry, is not shown in the cash book. So it has not come anywhere in the account book. The entry required is bank charges account debtor to bank account $3,200. Bank charges account is to be debited as it is a nominal account representing an expenditure of the firm. Bank account is to be credited as the money goes out of our bank account. Our bank account is the giver. Error number 3. A sale of furniture and fittings inherited but not considered in the opening entry for $12,000 is treated as sale of goods and credited in sales account. The cash collected on the sale is already debited in cash book. If such unusable accumulations had been recognized as asset and included in the opening entry, the opening capital would have gone up by $12,000. The rectification is needed only between capital account and sales account. The required entry is sales account debtor to capital account $12,000. Sales account is debited because $12,000 should be cut off from the sales account. Only sale of goods traded should be credited in sales account. Capital account should be credited for the reason stated above. Had this old furniture been considered as asset at the time of inheritance and debited in furniture and fittings account, the corresponding credit would have come in capital account. It has not happened. So here, on the sale of such furniture, we realized $12,000. So to that extent, capital account should go up. It need not be shown in furniture and fittings account, as does not affect the value of furniture and fittings account anyway. Slide 10 explains error number 4. A sale of goods for $6,000 from Najib and Company is debited in cash book bank column, but a collection is not so far materialized and is found irrecoverable. We have noticed this transaction while preparing bank reconciliation statement. There is debit entry in cash book bank column. There is no corresponding entry in passbook because collection is not so far materialized. Here it is found irrecoverable now. So this debit entry given in cash book bank column is to be cancelled. Credit entry to be given in cash book to cancel the wrong debit entry is by debiting Najib and Company. Najib and Company debtor to bank account $6,000. Then an entry for closing Najib and Company account is necessary as it has become irrecoverable. The irrecoverable debts arising from the operations of the firm are transferred to bad debts account. So the entry required is bad debts account debtor to Najib and Company $6,000. As a result, the entry will get cancelled from cash book and Najib and Company account will also get closed and the 6,000 rupees dollars will get debited in bad debts account. Error number 5. Clearance of some old debt due to Gurumurthy $300 is debited in commission account. The old debt is not shown as an asset in the opening entry. The debt due to Gurumurthy inherited would have been included in the opening entry. In that case, the capital account would have been reduced to that extent. The omission is rectified through the following entry. Capital account debtor to Gurumurthy $3,000. Credit for the net amount in opening entry, assets minus liabilities, goes to capital account. That credit should have go down to the extent of the amount payable to Gurumurthy by debiting capital account and crediting Gurumurthy account. The next correction needed is cancelling the wrong debit given in commission account. See, that amount payable to Gurumurthy is paid, but that is debited in commission account. That should be cancelled. So the entry required is Gurumurthy debtor to commission paid. Commission paid account is given credit. So the debit given commission paid account will go up. Gurumurthy's account already has credit and that will be cancelled by the debit given to Gurumurthy in this second entry. Because of the two entries, Gurumurthy's account which is settled through payment gets closed. The two entries can be combined and it can be shown as capital account debtor to commission paid $3,000. Instead of drawing these two entries and posting in ledger account, through this single entry, the correction can be done. Capital account debtor to commission paid 3,000 rupees. As a result of this entry, capital account will come down to the extent of 3,000 rupees, and whatever wrong debit given commission paid account will get cancelled. We know where there is cash book, there won't be cash account and bank account ledger book. Therefore, corrections demanding change in cash account and bank account are shown in the cash book. The complete cash book cannot be shown here because of lack of space. However, the entries required for correction are shown in red color. Please look at the debit side bottom. January 31 to interest on SP account $400 in bank column. This interest was shown in the passbook. Now it is recorded in cash book also. Corresponding entry will come in interest on SP account, credit side in the ledger book. And look on the credit side bottom. January 31 by bank charges 3,200. In the same way, this entry has come in passbook. Now it is shown in cash book also in bank column credit side. So the corresponding debit will come in bank charges account debit side. Now January 31 by Najib and Company $6,000. This was a wrong debit given in cash book debit side bank column that is cancelled through this credit given on the credit side bank column. Where the trial balance does not tally, the accountant will have to rectify errors disclosed by trial balance and errors not disclosed by trial balance. He has to open a suspense account ledger book and show the difference shown by the trial balance in that account in debit side or credit side as is necessary. Then the errors should be rectified one by one. The errors disclosed by trial balance, on rectifying them, a posting will come in suspense account. When all the errors disclosed by trial balance are rectified, suspense account will close automatically. Let us see how it works out in illustration number 2. Read the illustration. Rectify the following errors located from the books of James and Company for the year ending 30 June 2020. The trial balance shows a shortage in credit side of $15,140. The errors. Number 1. Discount allowed to Jerome and Company as per cash book is $250, whereas the amount credited in his account is $350. The extra amount credited $100, that should be cancelled. Further, one more error is there. Jerome and Company is debited with $100 for goods returned by Jerome and Company. Where sales returns occurs, the party's account should be credited. Here, instead of crediting the party's account is debited here. And not only that, debit is given the wrong account. Goods is returned by Jerome and Company, but debit is given Jerome and Company. Now, next error number 2. Check issued to Riaz and Company for $2,000 is wrongly debited in his account as $4,000. The extra debit given should be cancelled for $2,000. Now 3. Dalal and Company is credited with $5,000 in respect to goods purchased from it on 2nd June for $6,000. Actually, goods is purchased for $6,000 as is shown purchase day book. But party is given credit only for $5,000. Party should be given credit for $1,000 more. Surya & Sons is debited with $6,000 for goods purchased from it on September 2020 for $6,600. Surya & Company is to be given credit actually for purchase of goods from that party. But the credit is given, actually credit is not given, debit is given, but debit is only for $6,000. So that $6,000 wrong debit given should be cancelled and a credit should be given for actual 6,600 purchase. Next, second-hand sale of motor van to Devus for $2,000 is recorded in sales daybook. Sale of motor van fixed asset is to be shown in credited in motor van account. Here, the transaction is recorded in sales daybook, and so automatically the credit goes to sales account. That should be corrected. Next, the carry forward of balance $800 in Reggie and Company account for our debtor from 30th July to 1st August is done to the credit side of Reggie and Company account. In a debtor's account, balance probably will come only in debit side. Here it is wrongly shown on the credit side, and that should be cancelled, and debit should be given in account actually. Next is Patel Brothers has issued a check for $6,500 in final settlement of their account, but is credited by mistake in Patiala Brothers account. Where a party has given a check, then party is giver, and so account should be credited. Here credit is given but in wrong account. It is credited in Patiala Brothers account. Next, interest received $520 on 31st January is debited in interest paid account. Interest received is to be credited in interest received account. It is not done, and further it is debited in interest paid account. The wrong debit given interest paid account should be cancelled, and interest received account should be given credit. Slide number 14 gives rectifying entries for errors 1 and 2. Error number 1. Discount allowed to Jerome and Company as per cash book is $250, whereas the amount credited in his account is $350. The extra credit given for $100 should be cancelled. Entry is Jerome and Company debtor to suspense account $100, cancelling the excess credit for discount. Now, one more error is there. Jerome and Company is debited with $100 for goods returned by Jerome and Company. You have seen already where goods is returned by customer, party's account is to be given credit. Here, party's account is given credit. Not only that, Jerome and Company is debited instead of Jerome and Company. So, the excess debit given in Jerome and Company, the unnecessary debit given in Jerome and Company should be cancelled. Jerome and Company should be given credit exactly. So the entry is suspense account debtor $200 to Jerome and Company $100 for cancelling the wrong debit given in Jerome and Company. To Jerome and Company $100, the actual credit to be given. Cancelling the debit given in wrong account instead of crediting and crediting in the right account. Please note very carefully, in the rectifying entries, narration should be given very clearly so that whoever goes through should understand what exactly done. See, these two entries can be combined. See, in first entry, Jerome and Company debtor $100. In second entry, Jerome and Company is to be credited $100. So that debit and credit will cancel. Then in first entry, suspense account is credited for $100. In second entry, suspense account is debited for $200. So 100 will cancel and suspense account need be debited only for $100. And Jerome and Company is to be credited for $100. So the entry will become suspense account debtor to Jerome and Company $100. The two entries are combined and two errors are corrected by single journal entry. Suspense account debtor to Jerome and Company $100. Now error number 2. Check issued to Riaz and Company for $2,000 debited in his account as $4,000. Simple thing, the extra debit given should be cancelled. So Riaz and Company should be given credit for $2,000. Suspense account debtor to Riaz and Company $2,000. Slide 15 shows the rectifying entries for errors 3, 4 and 5. Error number 3. The L11 company is credited with $5,000 in respect to goods purchased from it on 2nd June for $6,000. Actually, the goods is purchased for $6,000 as shown in purchases daybook. So, the L11 company should be given an extra credit for $1,000. Entry is suspense account debtor to the L11 company $1,000. Short credit given for supply of goods corrected. Now, error number 4. Surya & Sons is debited with $6,000 for goods purchased from it on 30 September 2020 for $6,600. The purchase as shown in purchase daybook is for $6,600. Surya & Company should be given credit for that amount, but it is given debit for $6,000. So the wrong debit given to Surya & Company should be cancelled. One thing. Second thing, Surya & Company should be given actual credit for $6,600. So Surya & Company is to be given total credit for $12,600. The entry is suspense account debtor to Surya & Company $12,600. Wrong debit given on supply of goods of $6,000 cancelled and a required credit for $6,600 given. Now error number 5. Second-hand sale of motor van for $5,000 is credited in sales daybook. Is recorded in sales daybook. Actually, as is recorded in sales daybook, the credit will go to sales account. For a sale of second-hand motor van, fixed asset, motor van account is to be given credit. So the credit given in sales account should be cancelled. The entry is sales account debtor to motor van $2,000. Sale of motor van credited in sales account is cancelled and right credit given motor van account. Slide 16 gives rectification entries for errors 6, 7 and 8. Error number 6. The carry forward of balance $800 in Reggie & Company account, our debtor, from 30 July to 1st August is done to the credit side of Reggie & Company account. In a debtors account, balance brought down should come in debit side. Here he is given credit by mistake. That credit should be cancelled. For that, he should be given a debit for $800. And a further actual $800 debit he should get. So, Reggie & Company debtor to suspense account $1,600. Carry forward of balance to wrong side corrected. Now, error number 7. Patel Brothers has issued a check of $6,500 in final settlement of their account, but is credited by mistake in Patiala Brothers account. Where a party has issued a check, the party being giver should get credit. Here, it is wrongly credited in another account, Patiala Brothers account. So, Patiala Brothers account should be given debit and Patel Brothers account should be given credit. Patiala Brothers account debtor to Patel Brothers $6,500. Now, error number 8. Interest received $520 on 31st January is debited in interest paid account. Interest received is to be credited in interest received account. But it is debited in interest paid account. That wrong debit given to interest paid account should be cancelled by giving that account a credit of $520. And interest received account should get the actual credit $520. So the entry is suspense account debtor $1,040 to interest received account $520 to interest paid account $520. Slide 17 shows the suspense account. The shortage in the trial balance is on the credit side, and so the shortage $15,004 is shown on the credit side in suspense account. Then the rectification entries having an impact on suspense account are posted. In the debit side, to Riyasan Company $2,000, to Dalal Company $1,000, to Surya and Company $12,600, to interest received $520, to interest paid $520, to Jareem and Company $100, all on June 30. Now on credit side, by Reggie and Company $1,600. The suspense account is closing. 16,740 total on both the sides. This shows that the trial balance account is going to tally. The rest of the entries which do not affect the tallying of trial balance are also to be posted. The postings in the other accounts is not shown here. We will see it further at another stage. Okay, this lecture comes to an end. Please subscribe if you are not subscribed so far, and share to your friends and relatives who will be benefited by it. Thanks for your comments and like.